just spent $135 billion on AI in a single year. They just acquired a social network built exclusively for AI bots, and they're now building their own custom chips to compete directly with NVIDIA, and somehow the stock is down 17% from its highs. Billionaire Stanley Druckenmiller just dumped his entire position, and Dalio slashed his by 46%. So is Meta the smartest AI bet in the market, or is it spending itself into oblivion? Let's start with the spending. Meta guided 2026 capex at $115 to $135 billion. That's a 73% increase from last year. To put that in perspective, that's more than the GDP of over 100 countries. More than NASA's entire budget. Where is the money going? Data centers, custom silicon, AI training infrastructure. Meta just signed multi-billion-dollar deals with both NVIDIA and AMD, using NVIDIA's full chip stack for training and AMD's new MI450 chips for inference. They're not just buying AI from other companies anymore. They're building the entire stack in-house. And they just announced 4 new custom chips, the MTIA 300, 400, 450, and 500, designed specifically for Meta's recommendation and AI systems. When a company starts building its own silicon, that's not a phase. That's a permanent strategic shift. Now here's what the bears keep forgetting. Meta has 3.58 billion daily active users. That's not monthly, that's daily. Nearly half the planet opens a Meta app every single day. Q4 revenue came in at nearly $60 billion, up 24% year over year. Ad impressions grew 18%, and they just guided Q1 2026 for up to 56.5 billion, implying 30% growth is actually accelerating. This is not a company in trouble. This is a company growing at 30% while also spending $135 billion on infrastructure. The question is whether the spending pays off. And then there's the Moltbook acquisition. Meta just bought a social network built exclusively for AI agents. Not humans, AI bots interacting with each other autonomously. It sounds insane, but Zuckerberg is betting that the next wave of social media isn't humans posting. It's AI agents acting on behalf of humans. Shopping, scheduling, networking. If that thesis plays out, Meta owns the infrastructure for the entire agentic internet. Now the bear case. The stock hit $789 in August. It's at $638 now, down 17% in 6 months. Druckenmiller sold his entire position. Dalio cut 46%. The market is terrified that $135 billion in capex will crush free cash flow before the AI revenue materializes. And there's a real version of that risk. Meta spent $72 billion in capex in 2025, and Reality Labs alone lost over $16 billion that year. If the AI payoff takes longer than expected, the market will punish this stock brutally. We've seen that movie before. Meta dropped 64% in 2022 on spending fears. But here's the counter. At 22 times forward earnings with 30% revenue growth, Meta is trading cheaper than the S&P 500 average, cheaper than Costco, cheaper than basically every other Magnificent 7 stock. For a company with 3.5 billion daily users and the strongest advertising moat on the internet, that's objectively cheap. So what's the chaos capital take? Meta is making the biggest AI bet in corporate history outside of Amazon. The spending is real, the risk is real, but so is the moat. 3.5 billion daily users, 30% revenue growth, custom silicon, deals with NVIDIA and AMD. The Moltbook acquisition, positioning them for agentic AI, and a stock trading at 22 times earnings after a 17% pullback. If you believe AI advertising, personal superintelligence, and the agentic internet are real, Meta at $638 might be the best risk reward in the Magnificent 7. If you think the capex cycle breaks them, stay on the sideline and wait for proof. The capital markets are chaos. Embrace it, and I'll see you in the next video.